The latest FOMC event just happened where the Fed has not cut interest rates, nor have they made any change on quantitative tightening or QT. Do not worry though, as these results were already priced in going to this meeting. The real deadline that I have been watching and I talked about many times before is in September and the beginning of Q4. This is the actual deadline that the market is expecting the Fed to either cut rates or stop QT and turn on the money printer, or even both. So the question now is, can the crypto market sustain until September, or will we see yet another correction on altcoins? What are the other macro events that can change liquidity conditions over the next 2 months? And how will Bitcoin dominance react? Will it keep falling, or can it make a bounce soon and hurt altcoins again? We will answer all these questions in today's live stream. Our trading bots are still doing well, so the easiest thing you can do nowadays is to stay patient and focus on the blue chips and use an automated strategy to buy low and sell high for you. There will always be chops, especially in altcoins. So our bots have been just grinding up slow and steady, and not even just for Ethereum, Solana, XRP, for example. Some of our bots on PayPay, on Bitcoin or Tau, on Doge, on ADA are actually lower than the price that I have opened them at. So by following these strategies now, you not only have a strategy that automatically takes advantage of arbitrage and accumulates a bigger and bigger long position for the long term, and you have a lower entry price than when I have put money in. So I'm probably going to be putting more money into these bots. But you see here, I don't have any shitcoin bots at all yet. I don't think the time is right now. Just focusing on the blue chips, and these are just slow and steady, continuing to hold my position and hold my portfolio up quite well against whatever the market wants to do. So you can check out the first link in the description for a full tutorial of how to use these bots, how to set them up. And you can find this exact page where you can have all the settings and the buttons to directly copy these bots for yourself. Okay, so let's get into the FOMC announcement. Just really quick, get this out of the way. So the Federal Reserve did not cut interest rates in yesterday's meeting, and they did not turn on the money printer or pause QT. People have tried to make this as a panic event, but in reality, this has always been priced in 3 weeks ago already. If you look at some of the earlier headlines from the beginning of July, there was only roughly a 3% chance that the Fed will cut rates in July, according to most analysts' predictions. They were much more optimistic for the September meeting, which we'll talk about in a bit. And also you see here, this was the CME Fed Watch tool at the beginning of July for the forecast. And you see 95.3% people agreed that they were not going to cut anyways. And when it comes to QT, they did say mid-2025. It's kind of sad that they didn't pause QT yet. But that was the only thing that they have said since the beginning of the year. Nothing else has come out yet. And because QT now is very, very slow, only at $5 billion of runoff per month compared to $35 billion before. So you'll see in a bit that on charts I'll show you, the Federal Reserve's balance sheet is running off very, very slowly now. It's almost tapering off to flat already. So do not panic about this news. This is nothing that people didn't already know. Here is the FOMC statement. You can see just all the same, keeping rates the same and continuing to reduce the sides of their balance sheet, all the same. And the Powell did make some comments on what their plans are for the September meeting. So Powell suggested that Fed officials don't think tariffs will lead to a persistent inflation problem. A reasonable base case is that the effect on inflation could be short-lived, which is very good. So the the main thing that they're watching now in order to make the next decisions on whether to cut rates or not, and when they do it, is whether inflation can be under control. So this is actually very good. And Powell stopped short of suggesting a September rate cut was a done deal. So before, most analysts were saying that there is a 60% chance that rate cuts will begin by the September 16th FOMC meeting. Now, after this Q&A session by Powell, the CME FedWatch tool is now pricing in only 39% for a cut and 61% for no cut in September. Again, these rates will change quite a bit depending on the next numbers that come out over the next 6 weeks before we get the next meeting. But still, these are already the best, the actual time and deadline that makes a difference. It's not 95 versus 5% chance. It's pretty even split, and these will fluctuate. So the September meeting is actually something that we can watch, whereas this meeting, basically non-event. Okay, so that's all I'm going to say about the FOMC. This one really was nothing to be too excited about. They were not gonna cut anyways. So okay, we know that by September we really need to watch for their actual decision on the rates and their whether they pause QT or not. So from now until then, what are some other events that can happen? Can altcoins just continue to run? Can Bitcoin continue to run? And can the market just do well? Or is there some risk on the table? So there are two sides to this. Let's first cover the negative and then the potential positive. Both of these will involve macro events that can affect liquidity, particularly in the next 2 months. So very recently, there's this bill that has been passed called the One Big Beautiful Bill that's just been signed into law. Trump literally just signed this on July 4th, right here. So in here, there is a specific piece to address the debt ceiling, to raise the US debt ceiling by $5 trillion. Now, if you guys don't know, I've covered this since the beginning of the year. One of the biggest issues that the US government needed to get through in terms of liquidity this year is the expiry of the pause on the debt ceiling. So the US debt ceiling has hit their limit a few years ago already, and it has been paused, but was going to be resumed starting January 1st, 2025 this year. So basically since January, the government could not borrow more money, and they needed to do these extraordinary measures in order to pay their bills. So whenever this happens, the government needs to vote on whether they want to continue pausing the debt ceiling or they raise the debt ceiling. And when they're doing all this shenanigans, there has to be liquidity. They have to get money somewhere in order to pay their bills. So through this period, they have been using the Treasury General Account, the TGA account, in abbreviation, which you probably have heard of. This is one big component that contributed to the rise of liquidity this year, rise of global liquidity. So wherever you look at global liquidity measures across any indicators, TGA account will be one of the main parts there. So the TGA account is essentially a checking account for the US government, for the US Treasury. Whenever they need short-term money, they will draw down this amount, like what they have been doing this year. So essentially they are withdrawing money from their checking account in order to use, whether that's to support Treasury or whatever. But overall, that's liquidity positive because this money is coming out of the government's checking account into the markets. So since January, February, this TGA account has been drawn down from $830 billion to $296 billion. So about a $500 billion of liquidity injection by drawing down the TGA account. And this was mainly because they needed to do this to fund the government while the debt ceiling needed to be voted on. Now that they have passed to raise the debt ceiling, a lot of people suspect that the TGA account will be refilled back up, like what they have done in 2023. If this happens, there will be a liquidity sucking out liquidity event from the market while this happens. And if it gets back up to the 2024 levels, around 800 billion, that will be a $500 billion of liquidity that leaves the system. In other words, a decrease in total global liquidity by $500 billion if this happens. So if they do this, it will probably be within these same periods. You see the last time that it had been refilled took about 5 months. And back here in 2021, it went from December to May, also about 5 months. So it could be a 5 months where a bit of liquidity slowly leaves the system. Now, 500 billion compared to total global liquidity is not crazy, but it is a meaningful chunk. So I'll show you guys that right now. So here we have the Bitcoin dominance chart in candles, and in the purple line chart is the global liquidity. I'm going to take out that one. Yeah. So let's check the usual global liquidity calculations all right here. And you see this has started to roll over a bit. And the exact number for this you can find by comparing this with any other non-percentage chart. So the current global liquidity number is at $29.49 trillion. If there is a $0.5 trillion decrease on this, that would lead to 29 exactly of global liquidity, which is somewhere down here. So this isn't a break of trend. When you compare this with the macro trend of global liquidity, it will look okay. So let me put this back up here. If we get something like this, where it draws down to around 29 trillion, essentially what that would look like on global liquidity is a inverse head and shoulders, taking some time to play out and printing a higher low before breaking these new highs. So that would be quite healthy. It wouldn't be an immediate super crazy altcoin season and super great liquidity, but it wouldn't break the trend. So that's important to note. Even if the main liquidity suction happens over the next 5 months, it still wouldn't be that bad. We still wouldn't be at 2024 liquidity lows around 28 trillion. We would still be at 29 trillion. So that just goes to show you, okay, there is this to be watching out for, but it will not cause a macro change in global liquidity or macro change in the upcoming bull run. And you can even match the numbers yourself here. You see this global liquidity indicator in the settings. There is the Treasury General account right here. So if you uncheck the rest, you will see these numbers match up. Let it refresh. Here. So you see here the global liquidity, the TGA contribution to global liquidity is negative, because whenever TGA goes up, that means global liquidity is going down because liquidity is being sucked out. So usually it's negative 0.8 trillion or negative $800 billion, because here, when they have 800 billion in their checking account, that money is leaving the liquidity, leaving the total liquidity. So here it has gone up to negative 300 billion as they have used this money. But now if they draw down here and then refill this money, that would be something like this. But you see, this will be a $500 billion change. It's not the end of the world, but just something you need to pay attention to. If you hear anything over the next few months where people are saying, look, the US Treasury is sucking out liquidity, they're refilling the TGA account, it's doom and gloom, end of the world, just know that you're prepared for this. Okay, it's a regular event first half of the year, they injected this liquidity to help them get over the debt ceiling. Now that the debt ceiling event has been solved, they will need to refill their checking account, suck that bit of liquidity out of the system again. It's totally natural. Okay, so that's one part. The other part that can actually help our case is with the supplementary leverage ratio. I did talk about this a bit as well. So very quick here, what the supplementary ratio is it allows the top 4, top 5 banks in the US easier access to liquidity by putting up less collateral when they want to buy treasuries. So where is the here? There is a new proposal that has been put through by the Fed, the Board of Governors of the Federal Reserve System, back in June 17th, where they have proposed for, I believe the word they used is enhanced SLR ratio. So they want to allow top 4, top 5 banks in the US to be able to buy more treasuries with less collateral. This is obviously liquidity positive because at the top of the liquidity ladder is treasuries, how much demand there is for treasuries. So this is only in the proposal stage so far, and the next time that they will need to act on this is August 26th of this year. So by August 26th, there could be another something happening, right, where they say we have approved this, no further comments are needed, we're going to implement it in September, and thus that will be liquidity positive. And with this, we might see a liquidity positive event in September, which would fall right in line with the next FOMC meeting, should they cut rates or pause QT or do both. So this is another part that actually contributes to global liquidity over the next 2 months. And aside from these, that's basically it. So some events that can suck liquidity out, while another event in September that can boost liquidity. So with that being the background, you see kind of the question at hand here. Ultimately, what we want to see is for Bitcoin dominance to go down, right? This is the Bitcoin dominance chart on the candles, and this is the global liquidity chart on the purple line here. So we want Bitcoin dominance to go down like this. There are 2 things we need to watch. First is how Bitcoin dominance is reacting by itself compared to previous altcoin runs. So far, like we have mentioned, we have had a altcoin months, but we have not had a altcoin season yet. This is because you see 1, 2, 3, 4, 5 candles of down for Bitcoin dominance, but it basically stopped right at this 50-week estimate right here, the exact same spot. And I have been telling people, okay, if we close the week below the 50-week estimate, this will look really good. It will be the strongest altcoin run that we have had for 2 years. If it doesn't, then we could potentially chop. And you see here, we didn't close below it. So this is healthy and somewhat expected. So if people are saying now, oh, look, altcoin season is over, technically it's not over yet, but our goalpost now needs to be changed. We are no longer in altcoin months. We now have to see altcoins make a push really soon. And we need to see it take out this level right here from the last, from 2 and 3 weeks ago, 60.6% on Bitcoin dominance. What could happen here? Let's say Ethereum makes a big push. XRP, BNB, Dogecoin, Cardano, Solana, all the majors. If some of them can make a big push, that could get us over the finish line here. And we make a pattern like this where we bounce, but we break below. That would be really good. So that would invalidate this as a trap and actually continue a downtrend. But if we don't break below, and especially if we get all the way back up here to 64.5% and erase this major gain on altcoins on the week of July 14th, that would be bad, because honestly, that would be very weird. A lot of the main blue chip gains on altcoins would have been erased. So that's what we don't want to see. So I think the time is ticking a bit. Over the next 2 weeks, we need to see Bitcoin dominance break below 60.6% again and close below it. Until that happens, so far, it's looking like a similar pattern to right here. You don't need me to tell you this, right? You look at the 50-week SMA, you look at the peak of the Trump hype that led to an altcoin run. You see that we don't want to see this happen, right? We don't want a low and then a higher low. That is not good. It's natural to see a bounce, but the subsequent low, we need to take out this level. Very important. So yes, we're getting this altcoin correction. That's fine. But we need the subsequent drop to take out this low. Very, very important here. Otherwise, it will look exactly the same as the Trump election win time. And that would not be good, because we all know what happened to altcoins after that. It erased all the gains. Okay, so that's on Bitcoin dominance itself. Now, how does this relate to all the liquidity stuff we talked about? Very simple, okay? Liquidity conditions needs to improve for Bitcoin dominance to drop. This has always been the background, and this has led to the 2021 altcoin bull run and the 2017 altcoin bull run. So the reason why we talk so much about liquidity and how the next 2 months can play out is because we need to see, okay, can liquidity chart make a higher low like this and take out this recent high that we made and do this? So, and how long would it take for that to happen? And if it can happen by September, within 2 months, does that translate to Bitcoin dominance chart doing somewhat of the same over the next 2 months? So think about that, right? Those timelines, in my mind, actually match up quite well. So we do have this correction on Bitcoin dominance, where Bitcoin dominance is bouncing. And back here around the Trump run, right? Once it started to bounce, it was 1, 2, I'm going to zoom in a bit here. 1, 2, 3, 4 weeks. The 5th week, it confirmed the higher low. So 5 weeks from now, where does that lead us? That leads us to around September 1st, you see? And through this period, we have this Bitcoin dominance bounce, and we should have another natural drop. And subsequent, at the same time, global liquidity will have a drawdown, because we know, okay, the debt ceiling situation has been solved, so the TGA account will need to be refilled. And by September, hopefully something could have happened. The SLR proposal, maybe it could pass, or the Fed comes out with some other, next inflation numbers over the next 6 weeks, and people are expecting the rate cuts to actually happen by September 16th, the next FOMC meeting, or they make some sort of announcement about QT. So I think these two events could really match up together, where by September, if the Fed does nothing, and if the SR doesn't get approved, and if liquidity is still tight, then liquidity itself could be rolling over towards these lows. And that would not be good. Especially, we don't want it to be, if we get a bounce, we want it to bounce above here, because that would be a inverse head and shoulders. If we get all the way down to 28, to whatever this previous number is, I believe it's 28 trillion for liquidity. If liquidity gets back down to 28 trillion, that's not going to look good in September. And that will probably translate to Bitcoin dominance actually failing to break below this 60.6% and bounce back up again, like back here. And that would be a bad scenario. This is not my base case though. Let me be pretty clear with you. I do expect something to happen in September. We don't need much, right? Because the Fed has not done anything. They have so many options. They can cut rates, they can pause QT, they can do the SLR thing. A lot of things can happen, okay? They just need to do one. If they do, this liquidity chart will then do something like this by September, where it doesn't, it looks like it's not going to immediately break above this resistance here. But if it shows a higher low, that'll be really good, because that's the first higher low that we have made since literally forever. This one here wouldn't count because it's only 2 weeks. But it will be the first higher low that global liquidity has made since, when is this? September 2021. That'll be a really good sign. We just need a higher low on global liquidity. If that happens, because the Fed does anything at all, then this correction and this bounce on Bitcoin dominance should fade and take out 60%, and we continue to drop. This will be my base case. Again, this isn't happening imminently because this is a macro altcoin season we're talking about. This is a long-term altcoin season, and you need to be patient. Like the title of this live stream that I have put out, you need to be patient. It's not going to happen immediately. We have seen this happen before, right? A catalyst event drives Bitcoin dominance to this 50-week SMA. We get a bounce. You got to wait for this to play out. You don't want to blow all your load in one go. You play the blue chips first and wait for this to confirm itself. And I think by September, we can get this confirmation. So just hang in there. All the things do match. We just need the Fed to pivot on anything at all, okay? And that's all we need. Okay, last bit of perspective I want to give you guys. So I know these last 2 years has been very tough on altcoin investors because everyone's trying to make it imminently, and everyone thinks that they're missing out on the altcoin season if they don't ape 100x into shitcoins right away. But that's not the way to think about it, because you will have plenty of time if a real year-long altcoin season starts. And I have the data to show you here, and I'll give you a bit of perspective. So we all know that, let me remove the drawings here first. We all know that in 2021, this was a year-long altcoin season right here. And then in 2017, this was a year-long altcoin season. So intuitively, you want to catch these. But if you were late on the feeling of altcoin season, did you miss most of the gains? Well, let's take a look. So I think this altcoin season index is really helpful in conjunction to be used with Bitcoin dominance. So because this not only looks at Bitcoin dominance, but it also looks at the top altcoins and how they have been performing against Bitcoin. This is another way to think about it. So by doing it this way, you can quantify the time frame of how long altcoins have outperformed Bitcoin. Then you can say, okay, are we in a altcoin months? Are we in a altcoin season? In this case, it's an altcoin quarter, right? One season, spring, summer, fall, winter, 3 months. Or are we in an altcoin year? This is very important because the real altcoin season that everyone wants to happen and feel like they have missed out on is the altcoin year. The last 2 altcoin years that happened were 2017 to 2018, basically when this started. And from September 2020 to around the end of 2022. Let's say even the beginning of 2021 to end of 2021. Those were altcoin years. If you were betting on altcoins in these altcoin years, you didn't need to be early. You could be 3 months into it and still have 9 months to go where you can just bet on anything and make money. This is the real altcoin season that people feel like they've missed, but hasn't happened at all yet. Because look at the altcoin year index. It's nowhere to be found. On a year-to-year basis, altcoins have not outperformed Bitcoin yet at all. And you compare these two and you'll see some interesting stats here. In terms of altcoin month, we have been in an altcoin month. I have talked about this a little bit, just only using Bitcoin dominance and how it has been falling for 5 weeks. Yes, we are in an altcoin month, but this is the only thing that you feel like you need to catch. But in reality, you zoom out, look at how many altcoin months we've had. These are all the altcoin months. Each of these time, was it a good idea or bad idea to be aping into coins right away? It was always a bad idea. Okay, so back here, December 2024, bad idea. Here, July 2024, May 2024. Like, do you even remember these? You do not. So when we have a altcoin month alone, if you ape when you first see this sign, this feeling of altcoin month, everyone getting excited, that was actually a really bad time to go degen. The altcoin season, this one right here, this one is much more interesting. When you compare this one with the beginning of each altcoin year, there are some overlaps then. So first of all, the altcoin year, how it's been determined is how many top 50 coins have outperformed Bitcoin over a 90-day period. One season, okay, 3 months, 90-day period. Whenever 75% of the top 50 altcoins outperform Bitcoin for 3 months straight, that was a altcoin quarter, right? Altcoin 3 months. They call it altcoin season here. So when this signal triggered, it's worth paying attention then because, okay, December 2024, it didn't lead to an altcoin year. January 2024 wasn't an altcoin year. However, August 2022 also was an altcoin year, but April 2021 was altcoin year. And August 2020 was also the start of a altcoin year. So this here, if you aped on this one, you got in at right before, right at here. So this was a really good time to be betting into altcoins, August to September 2020. And then by the April 2021 altcoin quarter signal, that would have made you buy altcoins here. And that was still very good, okay? Because if you look on Bitcoin dominance, that was basically the first correction on Bitcoin. And then you had the metaverse run, you had the layer 1 run. So that was still good. So if you follow this altcoin quarter signal, this one right here, this one is way better than the altcoin month one. Because when this happens, you can look at, okay, do we have this, first of all, getting above the 75% signal? And can it hold above it? This one was a very quick wick. This one was a very quick wick. This one was pretty convincing, although it still wasn't enough. But then you look at this one. This March to April one, this was very good. This was plenty of times. How long did this hold above it? From March until June 2021. So when you see this altcoin quarter signal, getting above 75% and holding above it for, let's say, a couple months, there's a much higher chance for this to actually be an altcoin year, a real like macro altcoin season. Similarly, up here, August to September 2020, this was a good time as well. So what I'm trying to say here is ignore these type of patterns where you have an altcoin month. When you follow the first month that 75% of top altcoins outperform Bitcoin, inherently that is most likely to be a trap. I'm not saying, okay, that's a bearish signal, but I'm saying that's too short of a time. When it's only 1 month, because there are so many individual months where altcoins have outperformed Bitcoin, but then all of those gains are given back. If you just wait 1 more month, okay? And let's say ETH, Solana, XRP, BNB, some of the blue chips continue to hold up well against Bitcoin. Then this altcoin month will turn into altcoin 2 months. And then the altcoin quarter signal will continue to trend up. And then that will give you a much, much better chance based on statistics to lead to an actual altcoin year. So really, you have plenty of time. In fact, I would say wait 2 more months. If you already have the top 10 altcoins, you don't need to buy anything at all. If I had to make one choice right now, okay, to allocate my portfolio between Bitcoin, top 10 altcoins, and shitcoins, and wait, 2 months from now, I will only buy Bitcoin and blue chip alts and just let them sit for 2 months. Because I know, okay, if this is only an altcoin month and we have a drawdown, my coins will be fine. I'm holding ETH, Solana, XRP, BNB. Those will be fine. And I'm holding Bitcoin. Bitcoin is in a bull run. But if altcoins do run, well, then my coins will run a bit, not as much as the initial hype for low caps, but I'm not missing out on anything. Because that would, just 2 months from now, if altcoins continue to run, then we will only have 90 days where 75% of altcoins outperform Bitcoin. And then that's only the start of the altcoin quarter signal. So really, that wouldn't even confirm an altcoin year at all. So really, patience is your true friend here. The longer you can wait by not aping too hard, the more likely that you can actually know that this is a altcoin year. And once you know it's an altcoin year, you can be 3 months late and you still have 9 months to go. And if you aped altcoins, like shit coins, degen altcoins, 3 months into the 2021 bull run, you still made more than 100x, right? If you just were patient enough and you knew that this was the altcoin run, let's say you missed all of 2020, you missed DeFi summer, you missed early 2021. You only got in once Bitcoin was already at 60K, okay, by April 2021. And you just aped from May 2021 until the end of 2021. You still made so much money. That would have been more than enough. You would have outperformed everyone if you had that kind of foresight. And you actually conserved your capital. But what most people are doing now is whenever you get a altcoin month like this, when this happens, the first sign that this happens, everyone apes in too hard. And then just like this has happened, wow, this is kind of depressing. 1, 2, 3, 4, 5, 6. This is the 7th time that it has happened in 2 years. Every single one of these times, people called for altcoin season, when in reality, what they felt is a first sign of an altcoin month. And that was the worst time to be going too hard. When you feel this FOMO, just buy more Ethereum and then you're good. And if you just limit yourself to only buy when it's a altcoin quarter, you would have been much better off. You would have only been caught twice off guard. And you would have been fine because, you would have bought around January 2024, which was still a good time to buy. And if you just have been a little bit more patient than that, you wait for the altcoin quarter signal to confirm, let's say for 2 months, then you would have avoided both of these traps over the last 2 years and kept majority of your money in Bitcoin, waiting for this eventual altcoin year, which is something like this. So yeah, that's basically what these are really good for. People use it, like especially this altcoin season name, they use it completely wrong. They say that, oh, this altcoin season index is what altcoin season is. But in reality, this is altcoin quarter, altcoin 3 months. So this hasn't even been hit. And you don't want to front run this. It's so bad to try to front run this. You want to wait for this to hit and wait for it to last for longer than 1 month at least. And then maybe then the altcoin year index can actually come up somewhere close to the 75% mark, and then you go hard. This will be the best time. You will not be too late when this hits. And you will have so much higher confirmation, so much higher probability of getting it right versus trying to ape anything at all over the past 2 years and see that nothing has happened on a year-long basis. Before I go, make sure to follow me on X at VirtualBacon0x, where I have way more day-to-day updates for quick stuff, especially for this world liberty stuff. This narrative, I think it has merit. So I tweet about it a lot more, way more often. Follow me on Twitter. And check out our PoundX bots. Again, these bots fit my current strategy as well, focusing on the blue chips, heavy Bitcoin, heavy Ethereum, heavy Solana, heavy XRP, and just go from there. And whenever I see blue chips having a sale, like on BNB, I'm going to put more into this BNB and in the ADA bots because these are so cheap right now. So check them out. Full tutorial in the description. That's it. Thank you guys for watching, and I'll see you on the next video and next live stream. Bye-bye.